In this video, we are going to talk about the IBM stock. So before starting this video, please like this video and subscribe to this channel for our future updates. IBM is one of the few corporations with such a long and illustrious history, having shaped the development of computer technology for decades. Is IBM stock a purchase now, as the corporation continues its protracted and huge restructuring? IBM, formerly known as International Business Machines, was a pioneer in several areas of the computer industry. However, IBM is no longer as dominant as it once was. In the 1980s, the emergence of the Internet and the expansion of new technology businesses drastically altered computer designs. The metaphorical elephant was IBM's massive mainframe computers, which might be the size of an elephant. Customers migrated from centralized computing to a highly distributed technological network, catching the organization off surprise. The stock of International Business Machines, NYSE, IBM, has reached a new 52-week high, surpassing $150 per share for the first time in over a year. While its growing prominence in the cloud has attracted attention, it is still a corporation in flux. For IBM stockholders, the imminent separation of its managed infrastructure services business, dubbed Kyndryl, provides both opportunity and anxiety. Is the stock of the venerable tech company still a decent buy, given the issues it faces? The use of a hybrid cloud could be crucial. Since acquiring Red Hat in 2019, IBM has focused on hybrid cloud platforms, which allow public and private clouds to work together more smoothly. Amazon's Nasdaq, AMZN, AWS, Microsoft's Nasdaq, MSFT, Azure, and a slew of other competitors compete in this market. However, because of a lack of standardization among such systems, interactions between public and private clouds may be limited. Red Hat Enterprise Linux and Red Hat OpenShift enable cloud providers with a widely used code that might be standardized by the industry. A move like this could make it possible for public and private clouds to work together in a secure and seamless manner. Because most businesses today require both types of cloud, broad adoption of such a product would enhance IBM's bottom line and offer the company a competitive advantage over competitors. IBM's cloud revenue increased by 21% year-over-year, according to the company's first quarter results release. Over the same time period, the company's total revenue increased by only 1%. Despite higher revenue, net income dropped by 19%. This was due to a $1.2 billion tax benefit IBM received in the first quarter of 2020. IBM's revenue for the entire year 2020 is down 5% from the previous year. Despite this, cloud income increased by 19% throughout that time. Free cash flow came in at $11.6 billion over the last 4 quarters, easily enough to meet the $5.8 billion in dividend costs in 2020. At its current share price, the company's annual dividend of $6.56 per share yields about 4.4%, significantly above the S&P 500's 1.4% average. Unfortunately for IBM shareholders, the protracted process of spinning off Kyndryl, which is scheduled to be completed late this year, is fraught with risk. For one thing, investors have little idea how IBM or Kyndryl's financials would appear once the split is completed. Management has not indicated how much the hived-off business unit has impacted GTS's divisional revenue decreases, or even if it produces a profit on its own. There are also unanswered questions about IBM's side of the business. It's reasonable to assume that without Kyndryl, its sales growth will accelerate. IBM, on the other hand, has not stated how much its cloud business contributes to net profits or free cash flow. The current price-to-earnings (P/E) ratio for IBM stock is 25. This compares favorably to Microsoft's 35 multiple and Amazon's 63 ratio. However, investors may need to reconsider the value proposition once the post-spin-off IBM's P/E ratio is revealed. The other major question is how the dividend will be shared between the two corporations. Both firms will maintain a payment, and investors may rest confident that if annual payout increases continue, they will preserve their dividend aristocrat title. However, this strategy could result in one firm bearing up a disproportionate amount of the dividend costs. This would have substantial ramifications for income-oriented investors, who may have incentive to choose one business over the other after the split. IBM is remaking itself at a cost of $120 billion. As a result, IBM embarked on a multi-year restructuring that accelerated dramatically in October. That's when IBM revealed intentions to spin off a $19 billion technology consulting business so it can focus more on cloud computing and AI. The announcement resulted in a 6% increase in IBM stock. The Managed Infrastructure Services business unit will be split off into a new public company called Kyndryl. It aids in the management of a company's technological infrastructure. Hosting and network services, as well as infrastructure upgrade and cloud migration services, will be provided. IBM's multi-year transformation has centered on establishing and expanding what the company refers to as an open hybrid cloud platform, which CEO Arvind Krishna sees as a $1 trillion market opportunity. A hybrid cloud architecture allows IBM to deliver both a public cloud and a private cloud to its customers, providing additional network security. Data and applications are shared across them. Acquiring hybrid cloud and AI firms. In the year 2020, IBM conducted 7 purchases for a total of $723 million. Then, in its first quarter statement, IBM disclosed 3 further acquisitions totaling $987 million. IBM has announced 11 acquisitions since Krishna took over as CEO in April 2020. Krishna's mission is to redefine IBM's future, thus all 11 are focused on hybrid cloud and artificial intelligence. Furthermore, IBM has spent more than $120 billion on reinventing the corporation during the last decade. This includes $29 billion in capital expenditures, which will be used to expand its cloud operations and artificial intelligence offerings, as well as strengthen its security and services capabilities. The Cloud and Cognitive Software business unit at IBM is a rising star. It offers cloud computing services, as well as data and transaction processing platforms. It also includes what IBM refers to as cognitive applications, which is another word for AI. It's also the location of IBM's $34 billion acquisition of Red Hat. Red Hat is a cloud computing company that sells open-source software. It was crucial in IBM's tremendous growth into offering customers a hybrid cloud architecture, and it should help IBM stock. IBM sees a huge potential ahead of them. IBM's Cloud and Cognitive Software division, which includes Red Hat, had a first quarter revenue of $5.44 billion, up 4% from the previous quarter and far over analyst expectations of $5.3 billion. In a conference call with analysts, Krishna stated, "We can see signals of development in a number of areas. Our results in cloud and cognitive software revenue, as well as global business services revenue, show that they are on the mend, including a return to consulting growth." Krishna was previously the business's senior vice president of cloud and cognitive software. 1 year ago, he formally took over as CEO, succeeding Ginni Rometty, who had managed the corporation since 2012. IBM Stock Technical Analysis. A technical analysis of IBM stock is essential for assessing whether the stock is worth investing in. IBM has an IBD composite rating of 60 out of a possible 99, according to the IBD stock checkup tool. That's an increase from 48 a month ago. In terms of the most important fundamental and technical stock picking criteria, IBM stock currently beats only 60% of all stocks, according to the rating. The rating compares the price movement of a stock over the last 52 weeks to that of other equities. Look for stocks with an 80 or higher rating. At the moment of a huge price surge, the top stocks will generally have a rating of above 90. In addition, IBM's relative strength line has been trending in the wrong direction for years. It compares the performance of a stock to the S&P 500 index. The RS line of the strongest stocks is usually either confirming or leading the price of a stock into new high land. Is IBM stock a good investment? The stock of IBM is currently in a buy zone. On April 20, IBM posted its first quarterly sales growth since the second quarter of 2018. As a result, a handle with a purchase point of 137.17 was formed. The buying point has been extended to 144.03. It's currently trading just on the edge of that range, after which it'll be termed stretched. When a stock is 5% over the proper entry point, it is deemed stretched. It's a technical word that refers to when a stock's price has risen above its pivot or buy point, making it riskier to acquire. However, the stock is trading above its 50-day moving average and is holding above its 10-week line, which is a favorable sign. Both are encouraging signs. What do you think about our video? Let us know in the comments below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.